All right, good morning, everybody. Good afternoon. It's Trendy John from Simpler Trading. Today is the 10th of March, 2024. We are going to go ahead and start our broad market analysis for the week. I'm going to make this short and sweet. I hope you guys are having a wonderful weekend. I know I am. And getting ready, hopefully, here to have some late breakfast, I guess, with this time change. It's a little bit it's like a gift, right? We get longer days, but we also, at the end of the day, I woke up, I felt what was early this morning, but it was actually 7 o'clock when I got out of bed today. But finally got the charts done. We're going to hit these up, talk about the room a little bit, talk about what I'm expecting for the market this week. And we're going to start that off by talking about this week's major U.S. economic reports and Fed speakers. As a reminder, this is catalysts that are coming into the market that could increase volatility. I'm not trading based off of news, but I'm aware when news is going to hit the market. All right. There's some events that we cannot, uh, you know, be aware of sometimes. And so obviously those are not going to be on here, but I want to make it a point that you understand that supply and demand trading, we find the zones first, then we teach how to execute those zones, and these are catalysts that push price into those zones. So starting on Monday, as you can see here, we have nothing. Nothing is scheduled. And then Tuesday, we have Consumer Price Index, core CPI, and then we have the monthly US federal budget. These are in Eastern times. Wednesday, again, nothing scheduled. Thursday, U.S. retail sales, core PPI, and initial jobless claims. And then on Friday, we're coming in here and notice we have consumer sentiment and a couple other things early in the morning. Overall, far as the economic data goes, it looks pretty quiet out there this week. So we really want to make sure that we understand what are we actually setting up for. And the week after this, we have the Fed rate decision. So just keep that in mind. This next coming week, it could be sort of choppy. That is my sentiment with a little bit of caution. We'll get into that a little bit later, and I'll tell you why. Now, Earning Whispers out there on X, you can find this information as well. I love to use this. And you can see anything that I underlined in green. These are just names that I'm interested in. It doesn't necessarily mean I'm going to trade debit spreads into earnings, but I could. So I just want to be aware of those. And the names that I'm looking at that I specifically like are going to be Oracle. And then I'm looking at ONON, right, on cloud. Kohl's, right, great retail and bargain, if you will. Workhorse over here, Dollar Tree, Path, Lennar, Dollar General, Dick's, and Ulta and Blink, Adobe. All right. So it's winding down a little bit, but as you can see, we still have some great names out there that will be reporting. And the reason why I show these again is just to give you an idea that I might be trading this into earnings by using my strategy, using debit spreads. And of course, if you're in the room, you're going to get those alerts right over here in this section. All right. So again, this is so that you hear this, you understand that they are reporting, and if you see that name over here, I will make a note, but this is just to give you that warning in case I do trade them into earnings, okay? All right, so that's Earning Whispers. Now we're going to move on, and we are going to look at last week's. We'll go to Thinkorswim here in a second, so don't worry if you can't really read that well off of this screen. But how did the neutral strategy perform last week? It was amazing. I mean, if you had listened in on the broad market analysis, you know that prices came right into the demand zone. I said my overall sentiment was to buy the dip. That dip came right into both not only the SPY and the QQQ demand zone and then ripped there. We then pulled back on Friday and gave most of that move up, especially on the Qs. If you look at where we dipped and where price came back to, it looks like we took almost 75% of that away. And then over here on the SPY, it looks like about 50%. So if I were, let's see here, we kind of started in this range here and then we ended there. And over here, you could see again, maybe more like 68, 70% there, and then 50% on the SPY. And we'll get to that here in a few minutes when I talk about the futures and so forth, okay? So let's go ahead and move on to the SPY and QQQ neutral for this week. All right, we'll go over that here in a few minutes. And then let's go into TradingView and take a look at the bigger picture going into this week. If you guys will, just really quickly, don't forget to give us a like out here. Again, this is just a free video that I send out, and it really does matter. All right, on the likes, like if I get the support and so forth, that I keep doing these. I do appreciate everybody. A lot of you are very supportive. Just keep bringing that support. I really love that. Over here on the SPY, looking at the quarterly, it's important to understand that on both these charts that I'm going to show you, that we only have about 18 days left until this quarterly candle closes. Everything that I'm speaking on and talking about the quarter, basically anything can happen. I mean, we have 18 days. So yes, this candle is beautiful. It looks great. It looks continuation has happened. The buy signal worked from last quarter. Things have really picked up, but we've hit a lot of our targets. And I can tell over the last 2 weeks that things are feeling a little bit more exhausting, if you will. Right? We're getting through the end of the quarter. We've had this amazing 19-week rally, basically, you know, and at some point, the music kind of softens and we get back to reality and it gets a little choppy. And that's probably right around the corner from what I'm seeing. All right. But we don't want to be afraid to continue to buy the dip. We just want to make sure that we're picking the right zones and so forth. And again, we'll go over that here shortly. On the SPY, as far as quarterly notes go, if you look here, this is March the 10th, a new high was established. We had a 515 target. We talked about it last week. We hit it this week, and price closed lower than last week's close. So that's not like a great look, in my opinion, when we're coming off of such a rally. And if you're still buying, um, you know, that momentum, again, it could come to a stop. And this is just one little sign that I'm seeing here. Okay. The overall week closed inside. Now, this is really important. We'll get to this here in a few minutes when I look at the ES futures. We'll talk about that, okay? This is the second week out of 19 weeks that a candle closed inside. Why is that a big deal? Because we love inside candles. And I'll show you that here in a few minutes because to me, they're really easy to trade off of. And they're my favorite because they end up creating that inside and up or that inside and down formation that we talk about. And if you're new listening to me right now, after you get finished with this video, go over and do yourself a favor and watch the inside and up and inside and down video that I did. It teaches you how to identify these in about 3 to 5 minutes, and then you can practice on your own, and then you'll understand a little bit more what I'm talking about. All right. Now, I'm saying that the quarter high is in until it's not, right? You hear that, right? It's like a safe way of saying something. But we are getting some topping wicks on lower time frames. We're also on the cues, we're underneath the cloud on the 4 hour. And these are just little signs that I'm noticing. And again, it's just kind of helping me establish that overall sentiment for this week to just be cautious. We'll go over the zones, we'll talk about those, but I want you to be cautious until we can create some sort of base above the high. All right. So again, the top is in, far as my sentiment is concerned. I am expecting a little bit of chop and or consolidation, and then maybe into rate decision into next week and going in towards closer towards the end of the quarter, we start to get that little bit of rally to finish off the quarter. Okay. All right, so your near term, if you will, or close support will be 500 going into this week, and our long term support is going to be 492.40. 476. And if you look right here, we're at 511, so about $11 to the downside. If we indeed, pull back, I'd be looking for support there. Let's go over to the QQQ. And you'll notice here, very beautiful chart. The cloud, you'll notice back there on the SPY. Um, I want to reiterate this every time I talk to you on the broad market analysis that this cloud, if for some reason something weird happens this year and we get a significant pullback and we take out my long-term support, then I'm looking at buying in this cloud. You can go back for many, 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 many years and see that as long as we are pulling back to this cloud, we want to be looking at going long until it doesn't work. All right. And so I have to go off the probabilities that the cloud is going to work if we do indeed at some point pull back there. Okay. Now, your notes for March 10th, new high was established. 447 was hit. We talked about that the week before. We did hit it this week. We have also a weekly inside candle. The high is in for the quarter. That's what I'm saying until I'm wrong. Again, when I say that, I need you to understand if you're not in the room, it doesn't mean that we're not going long in some positions. I just need you to understand that if SPY, Qs, Dow Jones, RTY, IWM, if they decide to consolidate this week, all right, it just means be patient. Sell some credit if you're into that. We'll talk about those levels as well in the room. Just don't get too aggressive until we see a really good demand zone or we can prove that we can actually get over the high and build a base, okay? All right, so again, weekly support 431 by 429, and your long-term support is 423 by 407. And you'll notice that we closed at 439 and about down about a 1.5% on Friday. All right, so again, overall, that's what I'm looking at on the bigger picture. So next thing that I want to be concentrating on is going to be the dollar. All right. So we're going to pull up the DXY and talk through that just for a few minutes. And the dollar, basically what you're looking for when the dollar is peaking and pushing to the upside, we're looking for the market to basically start a cycle to the downside. Okay. Now, I like to look at this on a weekly, and I'm using the same zones that I've been teaching you for, gosh, man, it feels like in all reality, folks, we had found us, an area right here where we were looking for that drop, and this was back in 2022. And then we created this zone for you in December 2022. We talked through it. We came over here into some demand. As the dollar pushed up into supply, the market was kind of ugly before October. And as soon as the dollar hit supply, we were expecting, right, just like I teach you, for the dollar to drop. And as soon as the dollar started to drop, guess what? We've been rallying ever since. Then, when we came into demand, I was a little bit more cautious here. This was like a really interesting time over the last several weeks, is that even when the dollar was pushing, the market was only cycling to the downside like 1 to 2 days, and then it would push right back up. And when you look at it, it makes sense, right? We came into demand, dollar pushed up, we cycled, we got a little choppy in the market, but we continued making new highs. Then the dollar started to scare a couple people out there. But as we've been talking week to week, I said to look for the 618 or the golden Fibonacci to be a wall, right? It wasn't until prices could close above here that we wanted to actually start to get a little bit more worried. Well, that 618 is going to be a factor this week as well. But notice that the dollar dropped below that alert that I gave you over the last several weeks was that 102 level. It started to break through the 38.2 and headed right down here into 102, and I got my alert. Now, the reason this 102 is important is because even though the dollar started to drop, right, and the market did rally very nicely this last week, it then dropped on Friday. Now, if you look at it from a supply and demand perspective, it makes sense to me. So Friday, the dollar dropped right into an inside enough formation, okay, which is a demand zone. The dollar then bounced, and then the market started to pull back. This makes sense to me, okay? Now, going into this week, if this were any other chart, doesn't matter if it's the dollar or not, we're just talking technicals. As long as price is underneath the cloud and underneath the 618, I'm expecting these levels to be resistance until they're not. So if the dollar, let's say that we open up down tonight for any reason, couple points down, as long as the dollar is staying underneath the cloud, I'd expect some sort of relief rally coming into Monday morning. So even though we may start down, I would expect us to hit resistance up here. The dollar falls, we get a little bit of a relief rally. We don't really have any econ data tomorrow. It's quiet, so I really want you to focus on your technicals, okay? Again, I don't want you to be scared of the market unless we start to close above the 618. And what that's saying is the market, or the dollar, sorry, is in a downtrend until it can actually create a base above here. But because it's coming into a smaller demand zone, I do expect a little bit of a rally from the dollar until it hits these areas in here. Okay. All right, let's move on. We're going to look at the TNX or the 10-year Treasury. And everything's worked perfect. And I just love to be able to sit here and show you the proof of concept. I don't need news. I don't need to understand anything about rates when I'm trading. All I want to know is technically what are the charts doing. I told you a quarter ago, we only have 18 days to go. I said that this quarter you can expect TNX to trade between the inside and up formation and the inside and down. And I said I'm very convicted in that. In doing so, you understood not to get too hyped up about the Treasury, right? No matter what is coming out. I believe that this quarter will trade between those two levels. And it's not until we break below or above these levels that I want you to get, you know, just don't get up in arms. Just relax, okay? Everything that's happening right now is making sense to me. Let's go ahead and continue to move down here. We're going to look at the skew. So what did the skew do? It finally came off a little bit, right? And I said, hey, when we're up here, this is extreme. Basically, what you need to know is if you go back and you study the skew for many, many years, which we've been doing, is any time that it gets up here and we could just draw a trend line, right through here, right through here. If you were to look at the SPY, okay, is when we're in here, timing is the variable, and that's why we say 30 to 90 days out, you're buying puts. You can also do a week or two at a time. 2024 is interesting, and the fact that we're not getting big cycles down. So it really doesn't make sense to me to buy too much time on the puts. So I've been buying like deep in the money and then buying only about 2 weeks out or so. Right. And then if I'm wrong and we get a bounce, I'm adding into that and then I'm selling for profits afterwards. And we've done really well doing that on the QQQ. Okay. Now, again, I don't think you need to buy 30 and 90 days out, but what I'm trying to show you is that those levels were super extreme. And again, timing is the variable. So what this does is help you plan, right? So if you're trading your portfolio, meaning just your account, right, and you're trading it and you're noticing these things, well, you just kind of step with caution. Now, if you guys recall, back here we called for this level last year, and when we hit here, the ES futures pushed up 200 points in one day. One of the most magnificent days that I've seen, besides, when COVID hit, but this was awesome, and we have not seen those extreme levels since October 2022. It's been a very, very long time. So what's happened, and I know you guys have heard this plenty of times, but I like to talk about it over and over, is that right here in this section, okay, right here, we've been staying in here for a very long time. And this kind of has thrown people off because if you rely on the SKEW and you rely on RSI and all these other like, technical indicators a lot of people use, a lot of things are saying like, hey, be careful. But yet what they did was they basically made this obsolete. And anytime we come into this lower level, right, that's right about the time we start panicking, right? It really is because we haven't seen an extreme drop in the SKEW into this green level since October 22. So every time we get to this area, I'm telling you, and we've hit this level several times over the last year, every time we get here, this is where you start hearing all the bad stuff about the market, right? And it's right at the cusp, and believe me, I'm drinking the Kool-Aid as well at that level because it's a hard level. It's going to be one of those levels where it's worked several, several, several times, okay? That right at that level, you get that information that the market's about to really dump, and you start to back off, and then what do we get? We get a huge rally in the market, okay? And so again, this is acting like this green line, and it has been doing that for a very long time. Since about, you can see it right here. It's been acting like that since about April, March of 2023. So it's almost been a year. All right, so happy birthday to the SKEW for its new levels. But we caught on to it very early, and it's really helped out this year. Now, I want to remind everybody, if we get down here, it's going to feel extreme. And it's worked over and over and over to then look at getting long. But please understand, we're not just looking at the skew. This is why I show you all of these charts. So if you're watching me and listening to me, don't forget to hit the like, all right? So I continue teaching you this stuff. But just understand that I'm also looking at like my ES futures. I'm looking at that SPY and QQQ chart. I'm looking at the NASDAQ. I'm looking at the Dow Jones. I'm looking at RTY. And I want to know if we get here, are we coming into zones that I shared with you? Because then we have a lot of confluence and I'm looking for that move back to the upside. If we get down here and we're not near zones, then things could change. And I've been saying this over and over. If for some reason we actually close more than 1 week under here, say 2 weeks, all right, then I'm looking for a more extreme move to the downside. Now, I've been saying this for a very long time, man. It feels like, you know, it's just been a very long time that I've said that we will not see these levels until after the first quarter in 2024. I could be wrong. Maybe we never see the green level during the election year this year. Maybe we only stay here for almost 2 years. That would be crazy to me. All right. But if we start to close under here, what it means is that the market is pulling back, all right? And your hedge funds, all right, they're protecting themselves, all right? Very, very important to understand that. And then everything is really synergistically coming together for that bigger cycle to the downside. And it's hard. I want to talk about like trading. Trading is not easy. This has not been easy. I don't care how many people you follow out there on X or Facebook or whatever. Everybody wants to make things look easy. And from my standpoint, being a professional trader who teaches a lot of people over the years, thousands of people, I don't ever want to give off the impression that trading's easy. I think having a process, being consistent, and knowing how every morning to wake up and look at the levels that you choose to trade can be repeatable. That is what I want to make easy in your life. But I want you to know that trading is not easy. Okay. It's very, very difficult. It's hard to press the gas when, you had readings that you've been using for many, many years that have worked over and over. Then all of a sudden things change, the dynamics change. There's an election year. It just gets very difficult. And you get out here on social media, and I tell you what, you could come out here. All right. And by the way, this is me, guys. Make sure that you follow me. All right. If you're listening in, make sure you follow me. Please give me support out here when I am posting things to let me know that you appreciate those. But it is real easy to come through here and, just click on home and start scrolling through and seeing just how easy, traders make it sound, you know. By the way, I love F1, and so you're going to see a lot of F1 stuff on here, but everyone makes it sound easy. And I'm just saying it's not, and the charts are great, but at the same time, I need you to understand you're trading with money, always know your risk. Please get a process, one that you can rely on every single day, and it will begin to get easier. Okay. All right. So I talked about the skew enough. What about the fear and greed index, right? So if we come back over here and we take the fear and greed, all right, and we take a look at that. Give me 1 second. There we go. And come right here. You'll notice that it's at 71. So it's still saying that we're greedy, right? Not extremely greedy, just greedy. This tells me right away that investors, traders are getting a little bit smarter and they are starting to back off a little bit. Maybe some people are starting to hedge, buy a little bit more puts. But this kicked back about 6 points. I think we were at 77 last week. Now we're at 71. So that's a good sign, you know? I don't really like to be pegged over here all the way at extreme greed for a long time because again, max participants are on the long side and the market has a better opportunity to pull that rug on you. Okay. So just making you aware that we're at 71 this week. Okay. All right, let's go into the future so I can knock these out really quick. We're going to go through the weekly, and this is what I mean by inside candle. All right, so this is an inside candle from before, and we like to trade it inside and up, inside and down. And what I want you to do is take the top of that body and let that be your over, and underneath the body is your under. So it's an over under. If we start to move over the top of that, look to go long. If we start to break down below it, look to go short, and again, over under. Now, we won't know until the end of the week if this ends up being an inside and up formation or if this ends up being an inside and down. So one way that we use the inside candle is we basically anticipation, right? If we move over those levels, then we can look to get long and or short and use the appropriate risk and try to take that trade in the anticipation of an inside and up or inside and down. Notice on your weekly chart, same charts I've been giving you, we just simply pull back to our short-term support. Last week it worked very well. So if you're a futures trader and you bought off of this level, you did really, really well. Basically, this is an indecision candle. We had a high, we had a low, and we just kind of closed right in the middle. Okay. And usually you'll see this kind of stuff as exhaustion comes in. You'll get a topping wick. I got what's called a trendy turn signal. And another thing that I would be looking for is on this particular setup, if we push to the upside and we fail to make a new high, and about right around here, we start to then fall. This is where I would much rather, instead of trying to short the market, I would much rather try to sell credit up here, right? Sell call credit spreads on your SPY, QQQ, whatever, SPX. Um, that's where I'd be looking at selling credit on that relief rally. Okay. So again, a relief rally, not a new high. It's just going to bounce. It's going to throw people off. You make a lower high and then you just kind of chop. And I want to take in credit. Okay. Inside and up formation, just showing you what that looks like. And again, most likely we get it inside and up or inside and down next week. And the reason why I say that is because the body is so small, right? It's so small. In order for this to be, another inside candle, it would be weird. All right. But so I'm looking for an inside and up or inside and down going into next week. All right. So that is the weekly candle. There's not much more to talk about. Extension targets, we hit one of them to the upside. That would still be a target at around 51.71 and 52.30. And to the downside, support coming in at 5100 by 50.66. And if that breaks down, notice that both times it worked very well. If that breaks down, look for probably a round number 5,000, 5,012. Okay. Moving on, this is the daily. Now, I did not change the levels at all. So just to show you how well these things work, they do. If you bought here in the buy triggers in this level, it worked very, very well to the upside. We pushed through resistance, we hit our short trigger, and then again, we ended up just kind of pulling back. Notice what's important about the daily is the clouds are always important. Everything I teach you about the clouds is fractal. You can use it on a 5-minute, an hour, a weekly, a monthly, a quarterly. It doesn't matter. It is support until proven otherwise. Notice where this is. So from a daily perspective, all right, ES futures came in, topping wicks, pulled back, but we still are not and have not broken below the cloud at all. I would expect a relief bounce from here. If we open up down, be checking your daily 9 EMA. If we come into there, I would be expecting a relief bounce from there. Okay. That is all really that I have to talk about as far as the daily is concerned, except for this little green box. If we bust through all of these, we have a nice little inside and up formation. There's a nice, what I would consider a chaotic candle out of there. So we know that there's a little bit of volume behind this move. We know that there's interested demand in this move. And again, that is the level that I'd be looking at. Let's move on. This is the 4-hour. All these levels have been here for you guys. They've been working very, very well. The only thing I did this time was I took the resistance. I'm using my trendy edges up here. I am creating a zone, and this is going to be your resistance. This is the level that I was just talking about. If we were to move up here, this is where I tried to sell credit. Now, if you're just straight up like you like to trade puts, this is where I would try to buy puts. Okay. So again, I can sell credit here. I can buy puts, and I'm wrong if we create a base over this level. Okay. So again, that's the ES futures. Now let's get over to the NASDAQ. And I do create charts for the Dow Jones and the RTY. I just don't go over them in this video. And this is what the NASDAQ looks like. Again, we had a pullback. We had an inside candle. It's a little bit thicker, if you will, than the ES futures. So again, over under, just looking at the top of that body and below that body, we closed at support. This makes me feel like, hey, we could get a relief bounce on the open. Same thing with the ES futures. I'm more leaning towards a relief bounce on the open, and perhaps we move up towards these areas where I'd want to sell some credit tomorrow. Okay. All right, support worked, buy signal, it worked. We made a new high, but again, this isn't a very strong demand zone. This is just going to be called support. If this had continued here, and we had continuation, then we would have created a really nice zone to look to get long out of. But because this is, from the formation itself and where we moved up, it's pretty light, right? So I don't want to call this a demand zone. Matter of fact, it's just support. So again, it could break easily. And if it breaks, I want you guys to pay attention to your 9 EMA on the weekly and the levels to the downside that I have on here. On the daily, same levels as last week. Notice we came up, smacked the resistance. We got a turn signal to the downside. Real quick, your turn signals mean nothing to me unless we're hitting a level that I'm sharing with you. Okay. So again, I love them, but we only use them at demand and supply zones and or a line that is on my chart. Okay. That's how you make your signals a lot better. Ignore them if you're not at levels. Okay. All right, so we're going to keep these on here. We came into the trigger long. If you will, guys, if you understand this, we came in here last week. It worked very well. This is basically what I'm doing here is giving you a zone, okay? And I'm giving you the top of the zone and the back of the zone. And that's where we're looking at buyers to come in. And it did work last week. We didn't flush below. But again, just like the ES futures, we have this inside and up formation down here. It's just below the trigger long. So if we break down, I would expect a flush, but then a push right back up and then some resistance, okay? Now, on the 4 hour on the NASDAQ, same thing. If we get the relief rally and we start to bounce a little, this is where I'd be looking at selling credit. I'm not saying that we're even going to get up that far. This is 18,303. This is only about, 40 points away, so it is definitely possible. One note that I want to take from the 4 hour, it's different than the ES futures. On the ES futures, you were in the cloud, okay? Here on the NASDAQ, we're actually below the cloud. So now this cloud is going to be resistance until proven otherwise. So a little bit different look, but again, the NASDAQ and the ES futures, they close at or near support, and that's what's given me the idea that we could see a relief rally going into tomorrow morning. Okay, so that sums it up for the ES and the NASDAQ and everything else that I wanted to talk about today. I will be working on more charts and stuff like that later, but I'm going to go out and enjoy a beautiful Sunday with my kids and family. And I hope you have a wonderful weekend. Can't wait to trade with you. Have a great day.